Imagine waking up on your regular Social Security payment day, opening your banking app, and noticing that your monthly deposit hasn't arrived. For a few seconds, your mind starts racing. Did the bank make a mistake? Is there a delay? Did Social Security suspend my payment? Or perhaps an even more troubling question, did I miss an important rule that everyone else knew about? If you've seen headlines over the past few months, you've probably noticed some alarming claims saying that seniors need to verify their bank accounts, that new financial reviews are expanding, or that benefits could be affected if certain information isn't up to date. Some articles even make it sound as if the government is about to examine every retiree's bank account. Others insist that nothing has changed at all. So which version is true? Today, we're going to separate facts from fear. Because as we move through August 2026, one thing has become increasingly clear. Many seniors are hearing bits and pieces about Social Security, SSI, electronic bank verification, and financial reviews, but very few people understand how these topics actually fit together. And that confusion is exactly what scammers, misleading headlines, and social media rumors are taking advantage of. Here's what may surprise you. The biggest financial problems don't usually happen because someone intentionally breaks the rules. More often, they happen because of something surprisingly ordinary. An old savings account that was never closed. A forgotten certificate of deposit opened decades ago. A small inheritance that wasn't reported correctly. Or simply assuming that a financial change wasn't important enough to mention. Those everyday situations, not fraud, are often what create unnecessary reviews, confusing letters, repayment notices, or weeks of avoidable stress. That's why this video matters. Over the next few minutes, you'll learn exactly what has changed, who actually needs to pay attention, which rumors are completely false, what the Social Security Administration is really verifying in certain situations, and most importantly, the simple financial checklist every senior should complete before the end of 2026 to avoid unpleasant surprises later. And I promise you this, by the end of today's video, you'll understand this topic far better than someone who only reads headlines online. Because the reality is much less frightening and much more practical than many people realize. Hello, and welcome back. If this is your first time here, thank you for joining us. Our goal is simple. Every week, we break down important updates involving Social Security, retirement benefits, Medicare, taxes, and senior finances into clear, easy-to-understand language. No unnecessary legal jargon, no political arguments, and no sensational claims designed simply to attract clicks. Just practical information that helps you make better financial decisions. One thing we've learned over the years is that government programs often become confusing because people hear only part of the story. Someone reads one headline. Someone else watches a short social media clip. Another person hears something from a friend at church or from a neighbor. Soon, several completely different topics become mixed together into one frightening rumor. You've probably heard statements like these. The government is checking everyone's bank account now. You'll lose your Social Security if you have savings. Every senior has to complete a new bank verification. Benefits will stop automatically if your bank information isn't reviewed. Those statements sound alarming, but they leave out the most important part, context. And without context, even accurate information can become misleading. That's exactly why we're taking our time today. Because understanding the difference between Social Security retirement benefits, supplemental security income, better known as SSI, and electronic financial verification can save you from unnecessary worry. It can also help you recognize scams before they cost you money. Now, before we go any further, here's one very important point. This discussion is not about the government suddenly creating an entirely new system that affects every retiree in America. Instead, it's about understanding how existing financial verification systems are being used, why they matter for certain benefit programs, and why every senior, even those who don't receive SSI, should understand how these systems work. Knowledge is one of the best forms of financial protection, because when you understand the rules, you're much less likely to panic when you receive a letter, hear a rumor, or see another dramatic headline online. And speaking of dramatic headlines, there's one misunderstanding that's responsible for almost all of the confusion surrounding this topic. In fact, once you understand this single difference, nearly every scary story you've seen over the past several months suddenly makes a lot more sense. So before we talk about bank verification, financial accounts, or what you should review during August 2026, we first need to answer one simple question. Which Social Security program are we actually talking about? Because the answer to that question changes everything. And it's also the reason why so many Americans mistakenly believe that every retiree is facing the exact same requirements. Let's clear that up next. So, let's begin with the most important distinction that almost every misleading headline leaves out. When people say Social Security, they often assume every benefit program follows the same rules. But that's simply not the case. In reality, the Social Security Administration oversees several different programs, and each one has its own eligibility requirements. That's why understanding which benefit you receive is the first step toward understanding whether a particular update actually affects you. Let's start with traditional Social Security retirement benefits. These are the monthly benefits millions of Americans receive after working and paying Social Security payroll taxes throughout their careers. In general, your retirement benefit is based on your earnings history and the age at which you choose to claim benefits. Unlike some other assistance programs, your eligibility for retirement benefits is not based on how much money you have in your checking or savings account. That's an important point because many seniors worry that simply having savings could put their retirement checks at risk. For most retirement beneficiaries, that's not how the system works. Now let's look at another program, Social Security Disability Insurance, or SSDI. Like retirement benefits, SSDI is primarily based on your work history and the work credits you've earned before becoming disabled. Again, this program is generally not based on financial resources in the same way that certain assistance programs are. Then there's Supplemental Security Income, commonly known as SSI. This program is different. SSI is designed to help people who have limited income and limited financial resources. Because SSI is a needs-based program, eligibility depends not only on income, but also on certain countable resources, such as cash and some financial accounts, subject to the program's rules and limits. And that's where much of today's discussion begins. For years, the Social Security Administration has used verification tools to help confirm financial information for SSI applicants and recipients. This isn't a brand new concept that suddenly appeared in 2026. Electronic verification has been part of the administration of certain benefit programs for quite some time. What's changed over the years is that technology has become more advanced, electronic record matching has become more routine, and financial verification has become increasingly standardized during certain SSI claims and eligibility reviews. That distinction matters because there's a huge difference between saying, the government created a brand new rule that affects every senior, and saying, existing verification processes continue to play an important role for programs that already have financial eligibility requirements. Those are two very different statements. Unfortunately, many online headlines blur that distinction because dramatic headlines attract attention. But clarity is far more valuable than fear. Now, if you're receiving only traditional Social Security retirement benefits, you may be thinking, so none of this applies to me? The answer isn't quite that simple. While retirement benefits generally aren't subject to the same resource limits as SSI, understanding how government verification systems work is still worthwhile. Why? Because across many federal programs, not just Social Security, agencies increasingly rely on electronic records rather than paper files. Technology now allows information to be verified more efficiently than it could 20 or 30 years ago. That's part of a much broader modernization effort across government agencies. It doesn't mean every retiree is suddenly under investigation. It doesn't mean the government is monitoring your daily spending. And it certainly doesn't mean your retirement benefits automatically disappear because you have a savings account. Instead, it reflects a larger trend toward electronic verification and improved record accuracy. Think about how much banking has changed over the last 20 years. Most people now receive electronic statements. Many deposit checks using their phones. Direct deposit has replaced paper checks for millions of Americans. Financial institutions communicate electronically in ways that simply weren't possible decades ago. Government agencies have evolved alongside those changes. Electronic verification isn't designed to create problems for honest beneficiaries. In many cases, it's intended to reduce paperwork by confirming information more efficiently. Of course, that system works best when the information on file is accurate. And that's where honest mistakes can sometimes become an issue. Not because someone intended to hide anything, but because life happens. People move. Banks merge. Credit unions change names. Old accounts are forgotten. Certificates of deposit automatically renew. Family members pass away, leaving behind financial assets that weren't immediately understood. Over time, these small events can create differences between what someone remembers and what official records show. And when those differences surface during a routine review, they often catch people completely by surprise. That's why preparation matters so much. Not because you should fear every review, but because understanding your own financial picture is always better than being surprised by it. Now, there's another misconception we need to address before we go any further. Many people believe that financial verification means the government is watching every purchase they make. That isn't how these verification systems are designed to work. So what information can actually be verified? Are officials reviewing your grocery purchases? Your utility bills? Your credit card transactions? Or is the process much more limited than many people imagine? The answer may surprise you. And once you understand exactly what these verification systems are, and just as importantly, what they are not, many of the frightening rumors circulating online begin to fall apart. Let's take a closer look at that next. Now that we've cleared up the biggest misunderstanding, let's answer the question that many seniors are asking. What exactly is being verified? When people hear the phrase bank verification, it's easy to imagine the worst. Some picture someone reviewing every purchase they've made. Others worry that every withdrawal, every debit card transaction, or every online payment is being monitored. That's understandable, but that's not how these verification processes are generally intended to work. For programs like SSI, the purpose of financial verification is much more specific. It's designed to help confirm whether financial accounts and countable resources have been reported accurately under the program's eligibility rules. In other words, the focus isn't on whether you bought groceries last Tuesday or paid your electric bill online. It's about confirming information related to financial resources when that information is relevant to eligibility. That distinction is incredibly important. Let's think about your own financial life for a moment. Most people can immediately name the checking account where their Social Security payment is deposited. They probably know their primary savings account too. But what about the account you opened 15 or 20 years ago to qualify for a loan? Or the small savings account you created for holiday expenses and then completely forgot after changing banks? Maybe you once purchased a certificate of deposit that has quietly renewed over the years. Or perhaps you opened an account at a local credit union while working for an employer decades ago and assumed it had been closed after you changed jobs. Situations like these are surprisingly common, especially among people who've managed finances over several decades. Life changes. People retire. Banks merge. Branches close. Financial institutions change names. Paper statements stop arriving. And eventually, memories fade. None of those things are unusual. But one important fact remains. Forgotten doesn't necessarily mean closed. An account you haven't thought about for years may still exist. And if your name is still attached to it, it could become relevant during a verification process if you're in a program where resources matter. Now imagine this situation. Let's say there's a woman named Carol. She's been receiving SSI for several years. She carefully monitors her primary checking account because she knows financial resources matter for her benefit eligibility. She believes she has less than $1,000 available. During a routine review, another account appears under her name. Carol is shocked. She insists she has never tried to hide money. After contacting the financial institution, she discovers the account was opened nearly 30 years earlier through a workplace credit union. She left that employer decades ago. She assumed the account had been closed. Instead, it remained open with a modest balance that slowly earned interest over the years. Did Carol commit fraud? No. Did she intentionally conceal the account? No. She simply forgot it existed. Stories like this happen much more often than people realize. They're not dramatic criminal investigations. They're ordinary administrative situations created by the passage of time. That's one reason financial organization is so valuable. Finding an old account yourself is much less stressful than discovering it during an eligibility review. Another common situation involves inherited money. Suppose a parent passes away and leaves a small inheritance. The beneficiary deposits the funds into a savings account, assuming the amount is too small to matter. Months later, questions arise because the reporting requirements weren't fully understood. Again, the issue often isn't dishonesty. It's misunderstanding. And misunderstanding can usually be prevented with accurate information and timely communication. This is exactly why financial reviews can actually benefit honest recipients. When records are accurate, verification often confirms what has already been reported. Instead of creating problems, it can help resolve questions more quickly than the old paper-based systems that required endless back-and-forth documentation. Of course, that only works when information is complete and up-to-date. That's why experts consistently recommend reviewing your financial records on a regular basis. Not because you're expecting trouble, but because staying organized makes future reviews much easier if they ever occur. Now let's talk about another myth that's been spreading online. Some videos claim that beginning in 2026, the government will automatically freeze bank accounts or remove benefits the moment an account is discovered. That's simply not an accurate description of how administrative reviews generally work. Verification is one step. Determining eligibility is another. If questions arise, there are established procedures for reviewing the information, requesting clarification when appropriate, and communicating with the beneficiary. A verification does not automatically mean you've done something wrong, nor does it automatically mean your benefits disappear overnight. Those are two very different processes. Unfortunately, online rumors often combine them into one frightening story because fear generates clicks. Reality is usually much more straightforward. For most honest beneficiaries, good record keeping is the best protection. Knowing what accounts exist, understanding where your money is held, keeping important financial documents organized, and responding promptly if the Social Security Administration requests information. Those simple habits can prevent many of the situations that later become stressful. But there's another reason this topic has become especially important throughout 2026. Whenever people hear about verification, criminals hear opportunity. And over the past year, scammers have become increasingly sophisticated in using Social Security-related news to target older Americans. In fact, some of the newest scams begin with a phone call that sounds so convincing that even financially careful people have been fooled. Before you assume you'd never fall for one of these scams, you need to hear how they actually work, because recognizing them ahead of time could save you thousands of dollars, and perhaps even protect your Social Security benefits from identity theft. We'll cover those warning signs next. Let's talk about the part of this topic that deserves every senior's attention. Because while many of the headlines surrounding bank verification are exaggerated, the scams are very real. Every time there's news about Social Security, Medicare, taxes, or government benefits, criminals see an opportunity. They know many seniors are trying to stay informed. They know people are worried about missing an important update. And they know that fear often causes people to act before they stop and think. Imagine your phone rings one afternoon. The caller sounds professional. They know your full name. They claim they're calling from the Social Security Administration. Then they tell you something like this. Our records show your account must be verified under the August 2026 bank review procedures. If we can't complete verification today, your future payments could be delayed. Your heart immediately starts racing. The caller sounds confident. They speak calmly. They even reference government terminology you've recently heard on television or online. Then they say something that sounds perfectly reasonable. We'll help you complete the verification over the phone. We just need to confirm your bank account number, your social security number, and the security code we just texted to your phone. At that moment, many people believe they're protecting their benefits. In reality, they're giving sensitive financial information directly to a scammer. Unfortunately, criminals have become much more sophisticated than they were just a few years ago. Many can spoof official-looking phone numbers. Some send convincing emails. Others create fake websites that closely resemble legitimate government pages. Some even mail letters that appear authentic at first glance. That's why the safest rule is also the simplest. Never provide sensitive personal or financial information because of an unexpected phone call, email, or text message. If someone claims to represent the Social Security Administration and asks for immediate action, don't panic. Instead, end the conversation politely. Then contact the Social Security Administration yourself using official contact information from your own records or directly through the official SSA website. Never rely on a phone number, website, or email address provided by the person who contacted you. That's one of the easiest ways to avoid becoming a victim. Another scam that's become increasingly common involves so-called benefit protection services. A caller may claim they can help you pre-approve your bank account before future reviews. Others promise to protect your Social Security payments for a monthly fee. Some even advertise special monitoring services that supposedly prevent benefit interruptions. Here's the truth. No private company can guarantee approval of your Social Security benefits. No consultant can exempt you from legitimate eligibility reviews. And no business can legally bypass official Social Security procedures. If someone promises otherwise, that's a major warning sign. Now, with those scams in mind, let's shift our attention to something much more productive. Instead of worrying about rumors, let's focus on what you can actually do. Because preparation is always more valuable than panic. If you're receiving SSI, or if you're helping a spouse, parent, or loved one manage benefits, here's a practical financial checklist worth completing during the next few weeks. First, create a complete list of every financial account connected to your name. Don't rely on memory. Write down your checking accounts, savings accounts, credit union accounts, certificates of deposit, money market accounts, and any other financial accounts you may have opened over the years. If you're unsure whether an old account still exists, call a financial institution directly. A 10-minute phone call today could prevent weeks of confusion later. Second, review your current account balances. Don't estimate. Don't guess. Look at your actual statements. Knowing exactly where you stand is far better than assuming everything is correct. For people receiving SSI, understanding your countable resources is especially important because eligibility depends on financial rules that differ from traditional retirement benefits. Third, organize your important documents. Keep recent bank statements, Social Security correspondence, benefit notices, and any paperwork related to previous eligibility reviews in one safe location. Whether you prefer a physical folder or digital copies, having everything organized makes future questions much easier to answer. Fourth, don't ignore official letters. Many people delay opening government mail because they're nervous about what it might contain. That's understandable, but delaying usually makes problems worse, not better. If you receive a request for information, read it carefully. If something isn't clear, contact the Social Security Administration directly and ask questions. There's nothing wrong with requesting clarification. In fact, that's often the smartest thing you can do. Fifth, be cautious about financial changes. If your circumstances change in a way that may affect your benefits, such as receiving an inheritance, selling property, or opening a new financial account, take time to understand your reporting responsibilities. Many overpayment situations happen because someone honestly believed a particular change wasn't significant enough to report. When in doubt, it's always better to ask than to assume. Finally, and perhaps most importantly, talk with your family. Adult children often help aging parents manage finances. Brothers and sisters assist one another. Neighbors check in on neighbors. Simply having one trusted person who understands where important documents are kept can make an enormous difference if unexpected questions ever arise. Financial organization isn't just about protecting yourself. It's about making life easier for the people who care about you as well. Now, after everything we've discussed today, one important question still remains. If there isn't a brand new rule affecting every retiree, then what is the one lesson every senior should take away from all of this? The answer is surprisingly simple, and it may be one of the most valuable financial habits you can develop, not just for 2026, but for every year that follows. Let's wrap everything together in the final part of this discussion. So, after everything we've covered today, let's return to the question we asked at the very beginning. What should every senior do before the end of 2026? Surprisingly, the answer isn't opening a new bank account. It isn't moving your savings. It isn't making rush financial decisions because of dramatic headlines. And it certainly isn't panicking every time you hear the words verification or review. The single most important thing you can do is this. Know your own financial picture better than anyone else. Know which accounts belong to you. Know approximately what resources you have. Keep your important financial records organized. Understand which benefit program you receive. And if you're enrolled in a needs-based program like SSI, make sure you're familiar with the reporting requirements that apply to your situation. That simple preparation can prevent many of the surprises that cause unnecessary stress later. One lesson we've learned repeatedly over the years is that confusion, not fraud, is often what creates the biggest problems. Someone forgets about an old account. Someone assumes a small financial change doesn't matter. Someone ignores an official letter because it feels overwhelming. Those situations happen every day. Fortunately, there are also situations that can often be prevented with a little planning. As we move through the rest of 2026, you'll probably continue seeing attention-grabbing headlines claiming that Social Security is changing overnight, that everyone's bank account is being monitored, or that millions of seniors are about to lose their benefits. Whenever you see claims like that, pause for a moment and ask yourself one simple question. What's the complete story? Because financial topics are rarely as simple or as frightening as a headline makes them seem. More often than not, the details matter. And understanding those details gives you something incredibly valuable. Confidence. Confidence to recognize misinformation. Confidence to ask the right questions. Confidence to avoid scams. And confidence to make informed decisions instead of reacting to fear. There's one final suggestion I'd encourage every viewer to complete sometime this week. Set aside just 1 hour. During that hour, gather your recent bank statements. Review your financial accounts. Make a written list of every account connected to your name. Organize your important Social Security documents. And if you're helping a spouse, parent, or another loved one with finances, invite them to do the same. You don't have to solve every financial question in one afternoon. You simply need to know where you stand. That small investment of time can provide peace of mind long after today's headlines have faded. And before we finish, I'd like to leave you with one final reminder. If you ever receive an unexpected phone call, email, or text message claiming your Social Security benefits are in danger unless you provide personal information immediately, stop. Take a breath. Don't let urgency make the decision for you. Hang up. Verify the information independently using official Social Security contact information. Legitimate government business should always be something you can confirm through official channels. That simple habit has protected countless seniors from identity theft and financial fraud. Finally, if you found today's discussion helpful, consider sharing it with someone who could benefit from hearing it. Maybe it's your spouse, a parent, a neighbor, a friend from church, or someone who's recently retired and is still learning how these programs work. Sometimes the most valuable gift we can give another person isn't money. It's reliable information that helps them make better decisions. And if you'd like more straightforward explanations of Social Security, Medicare, retirement planning, tax updates, and senior financial topics, without the political noise or confusing jargon, be sure to subscribe and turn on notifications. Here, our goal isn't to create fear. It's to replace uncertainty with understanding. because staying informed today can help you avoid expensive mistakes tomorrow. Thank you so much for spending your time with us. We truly appreciate every single one of you. Take care of yourself. Stay informed. Stay organized. Stay alert for scams.